Good morning, everybody. Hey, welcome to Wednesday, June 29th. It's a big day today as the final GDP number comes out for the first quarter of 2022. We'll talk about that and more when we go on the air just a second with Scotty. Before we do that, though, remember that there's a lot of things in this world that you and I cannot control. However, there are some things that you can control when it comes to your portfolio, and that's the amount of risk you have. The problem I see is that people don't know and understand the amount of risk they have and making sure it matches up with their risk number. Give us a call at 863-382-0037 to schedule your core retirement design phone consultation where we make sure that you are prepared for the retirement you always dreamed of. Hey, with that, we've got Scotty getting us on air in just a few minutes.
Well, the group and the real holiday weekend all on the way. 8:36 now. Let's head to Statler Financial Services in Sebring because Phillip is standing by. Or are you sitting, Phillip? I'm not sure.
Nope. Hey, standing by right here. Scotty.
All right.
Yeah, it is a, we're halfway through this week, but we are almost all the way through the second quarter. And Scotty, I've got to say, there's some not so good news out there. And
okay.
we're going to have to talk about a lot of different stuff today coming out from an economic standpoint. You know, we talked earlier this week about one of the main things coming out was going to be the gross domestic product, the GDP.
Right.
That determines how much we're growing or how much we're shrinking when it comes to growth. The expectation, the very first reading was like a minus 1.4. The second reading was a minus 1.5. And now we have the third and final reading of GDP for the first quarter, and it dropped another 1/10% to a minus 1.6%. So not good news on the growth front. It means we're not growing, we're shrinking. And so that's the number everybody looks at when they start to try to determine, are we in a recession? That's one of two data points. The second data point is the next quarter. So as soon as we get into July, everybody's going to be looking and wondering, what is the GDP number for the second quarter? Now, a lot of folks believe we're already in a recession. We just don't have the data yet to show it. And that's could be very true. Nobody really knows until we get a chance to calculate everything out. But it's obviously possible and maybe even probable looking at where we are and how things are feeling out there right now. So that's how we're going to start off the day. And I got to tell you, Scotty, when that number came out, the futures started to fall. They had been in pretty decent shape to start the day, but they have given up any gains at all. Most of the indexes, 2 out of 3, have actually gone negative at this point as we get ready to start the day. You know, yesterday when you and I talked, we had some green ink, and we were hoping that maybe we could finish yesterday better than we did on Monday and have a great day. That unfortunately did not happen, Scotty. We did end up in the red again yesterday. And so a lot of that's because of what came out about 10 o'clock yesterday morning. So yesterday morning, I don't know if folks remember or not, but we talked about the consumer confidence index number was coming out at 10 o'clock yesterday morning.
Right.
It's the lowest we've seen, I think, in 18 months.
Oh my goodness.
It came in at 98.7, off from last month of 103.2. So a significant decline. Like I said, the lowest we've seen since, well, it says 16 months here, not 18 months. The lowest we've seen in 16 months. Still not good news. Consumer confidence is really getting hit hard because of gas prices and food prices, and just continue to look out and think that it looks like we could be heading into another recession. And so that's weighing on you and I, the consumer. So yesterday we did end up down, and it started about 10 o'clock is when we saw the major part of this downturn, which is about the time that the consumer confidence number came out. So the S&P 500 was down 2% yesterday. That closed at 3821. The Dow 30 was down a little over 1.5%. It ended up below 31,000 to 30,947. And then NASDAQ was down almost 3% yesterday, closed at 11,181. So definitely not a good day on Wall Street yesterday, as we continue to look at the possibility of an upcoming recession. All right, so where's that leave us at now, Scotty? Do you have any idea?
That's the question. Well, so far it doesn't sound great, Philip, but you always have a silver lining for us. You always do. So come on, pull something out of your hat.
I'm trying to find one. Scotty. It's a little bit difficult today.
Okay.
But let's look at, we did have some companies that did report. Now I will tell you, it's again, not all good news. So I guess I should start with the bad news. So at least maybe I have something good to talk about at the very end.
Okay.
So the worst case scenario, we had Bed Bath & Beyond. They were expected to lose money. They were expected to lose $1.33 a share. They actually lost $1.50 more than that. They lost $2.83 a share. Not good news at all. This has caused the departure of their current CEO. And they determined, the board has decided it's time for a leadership change, and that could very well be. So we're seeing that wider than expected loss, revenue getting hit. They're trading down this morning 14.7%. After closing down yesterday 3.26%. So they'll actually open up at a new 52-week low at this point, which is at $5.60 a share. Not much of a stock price at all. So, but it, retail's getting hit across the board. The other one that we had that was a little bit of a miss was McCormick Spice. They were expected to earn about 65 cents a share. They only earned 48 cents a share. So they missed there. They also cut their full year outlook. They're seeing negative impact from higher cost from their supply. They're still seeing supply chain issues, and they're battling some unfavored foreign currency trends right now. So they're getting hit from three different directions. McCormick is trading down a little over 5.5% this morning. Still above their 52-week low at about $82 right now a share. So not real good news for them as well. We've got one more earnings report. I'm going to leave that for just a second because we have two things that I think we need to mention before we go into that last earnings report, because they're not good news either. We've got Carnival Cruise Line. Morgan Stanley has cut the price target down almost in half to $7 a share. And so they're even thinking that they could go down to zero, which is not good news. I guess Carnival has a pretty high debt load right now. And if there's anything that creates any kind of shock wave or reduces passenger count, it could really put some strain on Carnival. They are down about 9% this morning, down to $9.40 a share. Still above their 52-week low, though. I will say that. The other one that has some news come out that we always talk about, and that's Tesla. Tesla is going to close a Silicon Valley office and lay off about 200 workers. Most of those workers have to do with the autopilot project and that type of stuff. So again, Tesla laying off folks, that's putting pressure on them. They're down a little over 1% this morning. So that's, I think, all the bad news I have, Scotty. Let's close with at least a little piece of good news. And we did have General Mills also reported earnings today. They beat by 11 cents a share, came in at $1.12 revenue top forecast. And so they're seeing a little bit of a pop. They did kind of look at their full year profit forecast and kind of drop that just a little bit, but they're trading up this morning, 2.5, almost 2.5% today.
Okay, saved by the cereal company. Yay!
That's right. There you go. Saved by the cereal.
Love it.
Yeah. So let's look at where the futures are leading us right now, and it's not looking really good this morning. We do have a little bit of green ink on the Dow 30. It's up a little over 1/10% right now to up $37. But everything else is red. We've got the S&P 500 down. It's down $1, so not much at all. The NASDAQ 100 down a little over 1/10%. The Russell 2000 down a little over 1/4%. So a little bit of red ink to open the day. We look at the other commodity side. Silver up 0.75%. Gold up a little over 0.6%, and crude oil, Scotty, again a big jump overnight, up almost 1.6% to $113.53 a barrel. So it's definitely going the wrong direction from what we really would like it to be going, for sure. We look at the some of the other markets in Europe. They're trading down this morning anywhere from 0.8% to 1.5%. Asia is also trading down anywhere from 0.9 to 1.8%. So everything's getting hit pretty hard, including crypto down as well this morning before we get going. And with that, I think that's all I've got to share with you guys this morning, other than don't forget that we've developed our core retirement design to help people design the retirement they always dreamed of, Scotty. And so would welcome people. Give us a call to schedule your core retirement design phone consultation, where we'll make sure you're heading the right direction for the retirement you always dreamed of. Give us a call at 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All right. Hey, we'll talk to you tomorrow. Thank you, Phillip. Have a good day, buddy.
All right, buddy. You too.
All right. We'll see you. Phillip Statler there, Statler Financial Services. Call 382-0037.
Hey, folks, again, I want to thank you for joining us today. I know it's not a pretty day, but remember that it all comes down to risk. How much risk do you have in your portfolio, and how much risk can you handle? The closer you get to retirement, the less risk you need to have. Give us a call at 863-382-0037. Schedule your core retirement design. With that, I look forward to speaking to you again tomorrow. Take care.